All right, I want to welcome Everett Sands from Lendistry. Excited to have you here, my friend, and excited about the information you're going to share with everyone on the video here. And Everett, I know we've known each other for many years, and if you wouldn't mind just sharing with our audience here, who is Lendistry and kind of how you got started with your company.
Thanks, Suleiman, for the opportunity. So, Lendistry, the best way to think about us is we're a hybrid of what is good about traditional banking, and those things are low cost of funds, low cost of customer acquisition, and risk management, blended with what's good about a fintech or financial technology company, which is efficiency, seamless user experience, and scalability. We focus on small business lending and commercial real estate. We're a national lender. Loan sizes range from 50,000 to $5 million. And we also have the ability to get involved in economic recovery situations, kind of like what's going on today with the CARES Act and things related to COVID-19.
Mm. So tell me, when did Lendistry get started? When did it get started, and how did you start off as a CDFI, or how did they evolve?
Yeah. So we started. I left Wells Fargo in September 2014, and like many business owners, you have a plan, and then you pivot, and you have a plan, and then you pivot. So one of our pivots was we actually merged with another company, and so the official start date is September 2015 because we got merged into that company. But when we first started, we were actually looking at the finance technology company, saying technology is the future. And we jumped out. We really started focusing on tech, but we realized that to help, what we wanted to do was we wanted to help underserved communities. We wanted to help Black people, but Black and Brown communities. And we said, okay, if we're going to help them, we got to find cheaper sources of capital. We got to find more flexible guidelines, just different things that we thought could work. And so what we realized is that we had to go back to the banking side. And again, that's where we kind of got that hybrid concept. But the answer to your question is we started one way, pivoted, and then said, okay, we need something that's going to help us serve underserved uh, communities or small business owners. We need something that's going to help us scale. And we need something that's a little bit closer to being a bank without being a bank. And so as a result of that, we ended up becoming what's called a community development financial institution, which essentially means we're certified by Treasury to participate in their programs. So no different than someone who's certified by the government, maybe government contracting, 8A certified, something like. But just think of the financial industry's version of something like that. It takes about 2.5 years to get the certification. At least it did for us. But once we got it, we realized that, this is what we wanted, and this will help us drive the mission that we were on.
Interesting. So you mentioned, serving underserved communities, Black and Brown communities. We hear it all the time.
Yeah,
Lack of access to capital.
yeah.
So you've kind of been in that space. You've been on the corporate side. You're now kind of as a CDFI. What are the challenges? Why do you think that underserved companies, minority-owned businesses have a challenge getting access to capital, and how are you kind of filling that void?
Yeah, so I mean, I think great question. I've worked at two African American banks in Wells Fargo, and I think what I've learned is that we have to improve our banking system, and that's going to take a while. I mean, we got to also remember we're trying to replace kind of centuries of issues, right, and challenges. But what we've seen with the main reason that small business owners don't have access to capital is they don't have people to look like them to understand what they go through, where they came from. There's not a cultural bias mixed with the ability to actually go out and get the capital themselves. No financial institution has the capital, right? If you're a bank, you got to go get deposits. If you're a lender, you got to go get a bank to give you a loan so that you can lend to other people. And you see that right now. I mean, the federal government is stepping up. The Federal Reserve is stepping up for banks. Well, the reason why the Federal Reserve has to step up is because banks have to borrow from the government. So everybody borrows from somebody. But I think the answer to your question, Suleiman, is just that we don't have enough institutions out there that are ready to deploy capital to us. And no matter who the institution is, you got to have your ducks in a row, your paperwork in a row, all those different things depending on the program. But just generally speaking, we just need more institutions. Uh, we need more institutions out there that can lend to our small business owners.
Yeah, and it's interesting. And we've had this conversation before. Access to capital has been an age-old, kind of issue within Black and Brown communities. And you've kind of shared with me and educated with me, the fact that also the community now it can become even more challenging with community banks being bought up and less
Yeah.
even institutions that lend. Can you talk to that and what kind of what the trends happening and why there's even more of a need for organizations like yours, CDFIs?
Yeah. So when I was at Wells Fargo, one of the things we were doing is we were participating, syndicating, and purchasing loans from community banks. This is 2010 through 2012, um, and at that time there were 11,000 banks that were 100 million in assets and below.
Mm,
Today there's 1,000. So you just think about that. I mean, I don't care what industry you're in, if 90% of the suppliers leave, any industry is going to suffer, right? Um, and that's devastating. I mean, it is literally devastating. And so that the key thing to know is that 11,000 were 70% of the small business lending community from a banking perspective. So 70% of all small business loans were completed by those 11,000 banks.
wow.
And so now the small business owner, it really doesn't have the banking anymore, right? And you saw it. I mean, we see it in the African American community. If you're in Philadelphia, you say, okay, United Bank, Berean Bank, Advanced Bank at one time. You had, but Berean's not there in West Philly anymore, right? So that's a small scale, but I'm sure there's several other banks that we could just kind of roll off our tongue, so to speak, that were in Philadelphia that you don't see anymore.
Mm,
Um, and so we're left now with these bigger banks. And the truth is, the smoke and mirrors is the bigger banks never really did a lot of small business loans. They did credit cards, they had deposits, they had bank branches. But as I mentioned to you, Wells, I mean, my direct origination team did 500 million a year, but our buying syndicating team did 52 billion a year. So just to put it in perspective, there was just so many more loans being done by the community banks. Not that we couldn't compete with them, because of course we can compete with anybody, but it just made more sense to help them out because they had the market share.
mm,
Um, Now, fast forward, you got to say, okay, we've lost 10,000 banks. Who's going to replace them?
mm.
Unfortunately, a lot of the predatory lenders have replaced them. And because the predatory lenders are there, and for our small business owners, that sometimes that's the only option, we've gravitated towards us. Now, here's the thing that's amazing about us. We're resilient as hell, especially Black small business owners. So we find a way to make it work despite having high cost of capital, despite having to put more money up, despite not getting larger loan amounts and all the different things that we're going through. But that's not the way it should be. And so that's why we want to encourage community development financial institutions, minority deposit institution, any institutions that can get in the game to jump into the game to help our small business owners out, because the difference in that interest that they're paying could be an additional employee, could be another business line, could be, extra wealth for the family, kids going to college. I mean, the list is long in terms of what that cash could be used for.
Yeah, yeah. And I mean, you've been in the lending space for many years. What are some examples of how small businesses are using capital to get their business off the ground, expand it? I think sometimes people who've never had access to capital, they've
Mhm.
started a business, it's been normalized that that's just how you start a business. But what are some kind of essential needs of capital that many small startup businesses have in order to scale and really be an operational business?
Yeah, I tend to think it's kind of like a generational thing, right? So I think when our parents were younger, they would say, go get a good job, right? Which generally meant a professional career, doctor, lawyer, et cetera. And they were absolutely right. I think the kind of newer generation, or us as we grew up, saw the Bill Gates of the world, the Warren Buffetts of the world, the Mark Zuckerberg. We started seeing these business owners make ridiculous amounts of money, right? I mean, Jeff Bezos has the story of being 23 years old and working at fast food. And now it's like, okay, well, he can buy any fast food chain of his choice, right? But what we learned is that business was a form of wealth, again, that we weren't really privy to, right? And so what I see now is we're at that next level of learning. And that next level is, so the first level is you learn how to do something really well. And so we know how to do our widgets really well. one of the things I think about is like government certifications. We've got a ton of African Americans who are certified in the government. And now all of a sudden they say, wait, I can have my own defense contractor. I could have my own contracting company. I could go out here and I could hire people to be temp employees for the government because of my certification, right? So we're cracking that level now where we're taking our own institutional knowledge and now we're starting to build our businesses. And so the answer to your question is, what we're learning how to do is how to hire other professionals, right? So it's kind of, you go through this evolution. The first stage is I got to learn everything A to Z. Now we're starting to go through that next stage of, oh, well, if I hire a CFO or if I hire a controller, then my financials are going to be better. I'm going to be stronger. I'm going to understand how much sales I need to do. I find the majority of Black business owners are amazing salespeople, because they had to sell themselves to quit their job and jump out there, but two, they've had to sell somebody. And of course we go through the Black tax, we go through all this, the prejudiced thoughts, everything that we go through in those meetings. We just learn how to be really, really good salespeople. Again, now we're kind of learning the other side is, oh, I need this infrastructure set up. And the infrastructure of a business is somebody to help you with finance, somebody to help you to, what I would say, cast your sales better, whether that's an admin, whether that's an executive assistant, whether that's somebody that helps you manage your time. And then the operational efficiency that we're now learning. Okay, it is actually good to have a chief operating officer or somebody like that. We call them glue positions. But those are the things that I see us utilizing the money for. Some people are pivoting now, right? We have financed several clothing manufacturers who've pivoted into PPE, right? So they're making masks, they're making different things. It's just very interesting to see not only our resilience, but how we're learning and evolving even through a pandemic.
That's great. Yeah. And as an entrepreneur myself, recognizing that, many times we end up being solopreneurs because
Mm.
we don't have the capital to hire someone. And with the inconsistency of invoices or inconsistency of business, many times you can't provide that steady paycheck that you would expect as an employee,
Right.
because it's unpredictable for yourself. But when you have that access to capital, that line of credit,
Mhm.
the business will come, but making sure that you can be consistent with payroll and other expenses as well. So
Yeah.
yeah, thank you for sharing that. And I know, we talked about businesses, a lot of small community banks being bought up by major banks. Now you partner with major banks. They use Lendistry as a way to actually lend to small businesses. Can you explain to the audience why big banks would use Lendistry as a way to give loans, and how many banks you're working with?
Yep. So banks use us for operational efficiency. And one of the things that I would like the listeners to understand, and I explain this in some of my conferences, so Suleiman, so don't think I'm crazy here. But the way I explain it at my conferences, I say, well, when you go to Dunkin' Donuts, what do you go to Dunkin' Donuts for? And the people in the conference say, well, I go there for coffee and donuts. And I say, well, why don't you go there for chicken sandwiches? And they said, well, Dunkin' Donuts doesn't serve chicken sandwiches. And I said, well, how do you know that? Did Dunkin' Donuts ever tell you that they don't have a chicken sandwich? And they no, the marketing is all geared towards donuts and coffee. And I try to tell people that banks are the exact same way. There are banks that only sell donuts and coffee, which in our world might be residential lending. Now, on the outside, it just looks like a bank, right? But when you get inside, they don't do small business lending, or they don't do commercial real estate loans, or there's some that don't do residential loans. And when you look at all the banks, I think there are roughly 6,000 or so in the country right now. That's one of the things that I think we don't quite understand, because they all have the word bank in them, but we don't recognize that actually each one does something different. And so me, just like any of the other entrepreneurs out there, recognize that not only are there different banks out there, but we have people in our underserved communities who don't understand the difference between the different banks. And so that means two things. That means, one, we could walk into a bank asking for a small business loan and we get declined, and we don't recognize that they decline us because they don't even do those types of loans. Had nothing to do with us. It's just that they don't do that type of loan, or they don't do that loan size, or they don't do that area, right? Or they don't do that product type, right? I'm getting kind of deep in the weeds here, but these are hard things when you're an entrepreneur and you're doing your job every single day. you don't have time to figure out, all these different things that I now have built up in terms of my knowledge base. And then the other thing I realized was that some of those banks want to get to you. So let's say it's a bank in Pittsburgh and they want to lend to you in Philadelphia. How do they actually get there? Now, the old school way is they had to go open up a bank branch or loan production office. They have to hire the people. Then they got to go find the business owner. Well, if they partner with us, we can go find the business owner for them. And so I saw a really big niche in connecting those dots, connecting the business owner who needed to, one, understand the right product they should be in, two, understand the right bank for that product. And then I also understood that the bank needed help, that they were trying to find the business owner. And then, the easiest way for me to do that was to invest in technology. And so the technology helps to connect those dots and connect those parties. And then as we grew, speaking of evolving, initially banks wanted to check our work. And they wouldn't give us the money. They say, well, we'll give you the money, but we're going to check your work first. Now we're at the point where the banks just give us the money. And so it's kind of cool. I mean, we're like every other small business. We're just growing and growing and growing. But the answer to your question is that we started partnering with banks because we realized there was a gap on both sides. On the borrower side, understanding exactly how banks work, and on the bank side, understanding how to get to that borrower.
That's great. Now, how many banks does Lendistry currently work with?
We work with 40 banks. So some are small that, small community banks that you'd be like, who is that? And then some are the big boys like the Goldman Sachs of the world, Chase Banks of the world. And it's been exciting, man. I mean, and for the entrepreneurs that are out there, I just got to throw this little line out there. I mean, we're going to get a lot of no's before we get those yeses. So, I'm right there with you. I remember, I'll tell you, Sumana, there was a time, 2014 is when I left Wells. We were top 1% in the country of all banks, of all units. And, I left in September. I walked in a couple of those banks' offices in November, and they said, well, we don't know if you actually know what you're doing. And I'd be like, 60 days ago, I was kicking you. What? What do you mean you don't know about what I'm doing? But anyway, when you become an entrepreneur, sometimes that resume starts from scratch again. But it's exciting to see, how we've grown and taken it to the next level.
Yeah, that's awesome. So speak to Community Reinvestment Act and why banks may also use Lendistry to loan money and potentially even at a discount.
Yeah. So Community Reinvestment Act was started in 1977. And essentially what it was an act where the federal government recognized that there was redlining, that underserved communities minority communities, were not receiving lending and other facilities and services. That's one part of it. The second part of it is that it is believed that if you have a federal bank charter, which gives you access to cheaper capital from the government. Remember, as what I said before, everybody borrows from somebody. That federal bank charter allows you to borrow from the government, that you kind of have a societal duty to make sure the neighborhoods that you're in reap some of that benefit. And so Community Reinvestment Act was created so that banks will reinvest in the communities that they serve. And what that traditionally means is wherever they have a bank branch, roughly about 0.25% of what we call core deposits needs to go out in community services, which could be time spent, it could be investment, or it could be lending. Now, what banks do is they generally, again, look for a partner to help them do these things. Sometimes it's because they're a really, really big bank and they just don't have enough resources to actually deploy the capital. And sometimes it's a smaller bank that's trying to get to a specific purpose. So imagine someone saying, I want to lend to minority businesses in Reading, Pennsylvania. And they might hire someone like Lendistry, of course, because we have the tech to try to find those people and do other things, but they'll hire us because they got a special need in Reading, Pennsylvania. And so we help them to solve it.
That's great. That's great. And I remember calling you just a few months ago once this kind of COVID-19 hit and, asking you to talk to some of our friends here in Philadelphia. I was on a conference call. He talked about kind of capital they were deploying here in Philadelphia. And I gave you a call to talk to some of the institutions, to the city, and, said, hey, if you can find any way to support, the Philadelphia business owners, many of the underserved business owners, definitely see if you can, to make that happen. And next thing I know, you closed a deal with Goldman Sachs.
Right.
Can you share with everyone kind of what that deal was and how you're able to, still here in Philadelphia with the PPP loans? Kind of explain what that is as well.
Sure. So we were close. We had agreed with Goldman Sachs that we were going to help lend towards SBA PPP. So again, to your earlier question, about financial institutions and partnerships, everybody knows Goldman Sachs is a major, well, the biggest, largest investment bank. Most people know that they have a company called Marcus that does personal loans, but what you might not know is that they don't do small business lending. And so they call Lendistry and say, look, we want to do small business lending because we want to help with this economic recovery related to the pandemic. And so when they called us, the deal was for $100 million. And we were dividing up what areas of the country we were going to try to help. Naturally, we were trying to focus on areas where there were strong or, minority, majority populations, which I really don't like that word, where there were Black people, right? So we chose Baltimore, we chose Philadelphia, we chose parts of Los Angeles, and not really that it had to be parts, but we were trying to be very intentional, I guess is the best way to say it. And so Philadelphia was interesting because when you had called me, there are 17 CDFIs there. So I made the assumption, which I shouldn't have, but I made the assumption that there were several SBA Community Advantage lenders there or SBA lenders there. And we came to find out very quickly that there weren't. And so it turned from a conversation with you to, hey, let's research this, to, oh my gosh, this is a real serious potential issue, because if the lenders don't have the SBA license, we knew from conversation with SBA that they weren't going to quickly be able to turn around those licenses or those approvals. Not because SBA didn't want to, but they were going through a pandemic and they were trying to figure out how to get out billions of dollars. And just so you know, SBA had less than 10 people on the team when all this started. So they just didn't have the resources. The crazy thing that you might not know about SBA is, and those who are in government know this well, the budget was already set, right? So SBA can't just put out a help ad and just start hiring people. They literally have to get a government budget approval to hire the people, even though they were in a pandemic.
Right.
And it wasn't until the second bill that they got authority to hire people. As crazy it was, they went so fast through getting the bill pushed through Congress, they forgot to give them approval to hire people. Anyway, so I say all that to say that we allocated $10 million to Philadelphia. We said, let's find small business owners. Thank you to you, because you helped us. Thank you to Donovan over at the African American Chamber. Really, really appreciate all the work that he did. Thank you to the city. And thank you to PIDC, because a lot of people assembled really quickly. And listen, we were out of towners. Let's just call it what it is. But they trusted us to jump in and start helping the small business owners.
Yeah, no, that's great. That's great. And putting the people first, and glad you were able to kind of step in the gap and make that happen. So, now I know some people apply for PPP. Many businesses did get the PPP funding.
Yeah.
Can you share with, and I'm sure some people may think that, I know it was such a rush that people may think that money's gone now. Maybe missed that opportunity. Could you explain kind of where PPP is now? And then and I'll ask a few more questions about who qualifies and all that kind of stuff as well.
Sure, no problem. So PPP today, as it stands literally right now, has $125 billion remaining. Small business owners can still apply through June 30th. Lendistry is still accepting applications at mylendistry.com, but I'm sure you'll send out a link. So make sure you use that link, because then we can chart you and make sure you do well and give you the right attention you need. I just want to say, I think that now is a really, really good time to apply. Unlike those who applied in the beginning, where there was a mad rush and a panic, and you didn't know whether you need a document. SBA was changing the rules and the guidelines. That's completely different now. SBA has went through 19 rule changes. That's no fun for me, but for those who apply now, a lot of the bumps in the road have been fixed. An example of that would be those who are independent contractors who file a Schedule C, or sole proprietors who file a Schedule C. Those rules have lightened up considerably.
Mm.
And so, I think it's a different program now than it was when it first rolled out.
Great, great. And we'll provide a link. I know we talked about making sure those who apply through that link that we can stay on track with it, make sure they get the proper attention to get, make sure they're get that personal attention to get the loans, here in Philadelphia as well.
Yep.
And I want to ask, so who could apply for this? Like, is a certain size business, certain type of credit score you need to have? What's the underwriting for something like this?
Yeah. So the first thing I want to say to people is this is not your regular SBA. So I think if we're being honest, I think SBA has not been the best product for African Americans to get access to capital to. Historically, 3% of the money in their best years had went towards African Americans. And so the first thing I think we should be telling people is this is not that same loan.
Mm.
There's no collateral required. There's no credit required. There's no personal guarantee required.
Wow.
And so it's a completely different loan. That's number one. What you need to have is you need to either pay yourself. So we'll start with the sole proprietors. You got to fill out a Schedule C 2019. It doesn't go to the IRS. And what we're going to look at is line number 31, which is your net profit. We divide it by 12 and multiply by 2.5. As long as it's not over 100,000, because 100,000 is the cap, that's the amount of money you're going to receive if you're a sole proprietor without employees. If you're a sole proprietor with employees, we take that same net profit number, divided by 12, but we also add your wages to it, which I believe is line 26 of the Schedule C. We add that and then multiply by 12. Well, divide the wages by 12, and then we multiply those two numbers by 2.5. And then it's for your limited liability companies, your S corps, and your corporations. In those scenarios, we're looking for the wages that you pay. Again, we take a monthly average, so that's where you hear me saying divide by 12, and then we multiply by 2.5. Again, I would encourage as many small business owners as possible to keep applying, because this is, I would encourage as many small business owners as possible to apply.
Okay.
Because this is a forgivable loan. Once you get the loan, as long as you spend 60% on payroll and 40% on rent, utilities, mortgage interest related to your business, then the whole loan 100% gets forgiven.
Wow.
And I just think we got to take advantage of it. It's like a grant. I mean, forgivable and loan usually don't go in the same sentence together. So I could understand how some people might be like, yeah, right. But the truth is that Congress and the past borrowers have beat up SBA so much that this is, this is the loan product you want right now.
That's great. So question for you, a person who doesn't have payroll, they're 1099, basically they pay themselves.
Yeah.
Every year. So how would that work for them? Is do they have to set themselves in the payroll system, or could it be that they've been taking owner draws or whatever it may be to pay themselves? Is there anything specific on how they file?
Yeah, great question. So if they pay them, let's break it down two ways. Let's break it down as a partnership, which would be kind of the owner draw scenario potentially, and then let's break it down with the sole proprietors and the 1099s. So the sole proprietors and 1099s. So you're just a self-employed individual. You file Schedule C. Your 1099, you report on Schedule C. As long as you do that draft Schedule C and provide a copy of your 1099s, assuming you get 1099s, then you can get that loan.
Okay.
Now, if you're taking ownership draws, I'm going to assume it's a partnership. And so you want to look at your K1 and you're looking for line 14A. In 14A, we divide by 12 and then multiply by 2.5 to determine your loan amount.
Okay.
But the answer to your question is absolutely they can apply and absolutely they can get money. Question, in terms of documentation, what they have to provide. And we will help them through all that.
Okay. That's great. So what if a person, they're a contractor, they worked for a company and they paid them, as a contractor, they got a 1099 for that work. Is that the same scenario?
Same scenario. So
Mm,
same process. We're going to just ask for a copy of whatever the 1099. They don't have to do the payroll summary. So when you hear payroll summary for the independent contractor, that actually goes away.
okay.
They just get us a copy of the 1099. It's
Mm,
actually easier for them. I would say the 1099 is actually the easiest loan it could be in terms of PPP. You just want to be careful that when you're filing that 2000, when you give us the draft 2019 tax return,
mm,
you're showing the income that you make.
okay.
Again, what a lot of people doing is they're treating us like the IRS, so they're writing off everything, including the kitchen sink. And
Mm,
yeah, when you file it with the IRS, that might be the right way to go.
mm,
But when you're doing it with us, we're trying to get an idea of what's the income you put into your pocket, and so
mm,
it's going to be a little bit different in the way in your perspective or how we would look at that.
yeah. And what if someone, so all these gig economy jobs? So you got folks who did Uber, you have folks who did TaskRabbit. They were, doing all these different Uber Eats things of that sort. Does that apply? I'm assuming that applies for them as well.
Absolutely. All of them literally fit into the exact same bucket.
Wow.
So all of them are going to do the exact same thing.
Mm,
Where we find some of the business owners or self-employed individuals are making mistakes is, again, they're worried that we're sending the documentation to the IRS, right? And so they're a little bit more focused on, okay, maybe how do I report this or how do I show this? And
mm,
they just got to know that we're interested in helping them get the money that they put into their pocket,
mm, mm.
not so much the money that they're reporting to the IRS. But
Got
all of those barbers, beauty salons,
it. Mm,
everybody kind of fits into that same bucket.
wow. Wow. So is it so how about those who do you guys also do like back tax checks and things of that sort? What if they are, they have an agreement or they're trying to work on
Yeah,
2018, 2017, still haven't done that? What kind of scenarios for them? Do they qualify or not?
yeah, great question. The only way they wouldn't, so we don't check taxes, state or federal. The only way that they're not going to qualify is if they defaulted on the government. So think of a student loan, FHA loan, VA loan, SBA loan, and the government took a loss. The key word being there is "and," because we approved plenty of people that have had late student loan payments. Uh, it shows 150 days late on the credit report. So by credit definition, that would be a default. But when we do our check, there's no loss that the government has taken.
Mm,
And so if there's no loss that the government has taken, they can move forward.
got it. Got it. So you're not checking for back taxes, things of that sort
Nope,
with this particular loan. Okay.
nope.
So no, I think that's great information. I'm sure a lot of folks who are listening to this, go to, again, we'll provide the link for you to actually apply for this PPP loan. It's till June 30th. I think Everett mentioned. We'll make sure we get this information out as soon as possible. And I'm sure that opened up for a lot of people who didn't even realize that they can qualify for that.
Yeah.
And the other one is the EIDL. Can you explain what that stands for and what that loan is for as well?
Sure. So the economic injury disaster loan, we encourage everybody to apply. So let's take a step back, Suleiman, and let's talk about a business.
Mm,
A business needs two types of capital, equity and debt. And so I want your listeners to be thinking about this, like, how do I get equity and how do I get debt from the government, right? So there's one way of equity or debt that can become equity is a loan that gets forgiven. So that's why, to me, the PPP loan is so important, because when have you ever been given money that can be forgiven? Because technically that becomes equity. The second one is the economic injury disaster loan, or EIDL. We want everybody to apply because, one, it got $60 billion in the second round. So another fresh slug of capital came into that one. You don't have to get approved for the loan, and you still can get up to $10,000 as a grant. So
mm,
now we just got two forms of equity. Now let's be real. Black people, generally speaking, don't know where to get equity, right? We have to borrow from our credit cards, borrow from our homes. Hopefully we got some friends and family, right? But we surely don't get government handouts.
wow.
And so we got two chances, if we know how to play the game right, to get the money,
Hmm.
right? Now, the answer to your question, the economic injury disaster loan is a loan in which they look at your tax returns and your financials, and then they can give you a loan. If it's a nonprofit, the interest rate is 2.75, and if it's a for-profit, it's 3.75.
Mm.
The loan could go up to 30 years. If it's greater than 25,000, there will be a personal guarantee. And I don't know the formula because the SBA underwrites that directly. But what we will make sure is that we also get that link so you can send it out
Okay.
to your listeners.
Awesome. Awesome. So can a person apply for both the PPP
Absolutely.
and the I? Oh, got it.
Not only can they must.
Hmm.
They must apply for both. I want them to get declined for both as a worst case scenario because
Mhm.
I'm pretty sure that's not what's going to happen.
Mhm.
I'm gonna challenge them. I'm gonna challenge them the way they would be sitting in front of that TV watching the Eagles game on Sunday, right? They need to do it. They need to just do it.
Right, right. Take and again, sometimes they've hit their head so many times, got
Yeah,
declined so many times.
yeah,
It's
yeah,
almost like the pike fish. You got all these guppies around you, but because
yeah,
you hitting your head so many times and couldn't get it, you just starve. And the reality is, everyone's been affected by this COVID-19. So
yeah, yeah,
that is the purpose of it, and to help folks to supercharge and get the economy going, if you will,
yeah,
as business owners. So we want to make sure that Black and brown business owners recognize that this is as you mentioned, equity opportunity if they
yeah.
do the right thing with it.
That's right. And so, Amon, I want to make sure we say a couple of things. Even if a person or business owner has been declined, we still want them to apply. We've
Mm,
heard business owners get declined because they didn't have their paperwork together.
mm,
We heard that because they didn't have a loan with the bank previously. At Lendistry, we don't have those rules,
mm,
right? So we want them to apply, even if we have so many borrowers that we're approving right now that have been declined by another financial institution, or their financial institution stopped originating PPP loans, so they thought they couldn't do it. Um, Same thing with the EIDL loan. There was a small period. There were two periods there. There was one period where it ran out of money,
mm.
and there was another period where they were only taking agricultural small businesses. So think of your farmers.
Okay.
That's been opened back up. So I want to make sure we make that clear to your audience that they might have been, bumped their head against the wall, as we just mentioned. They might have been declined somewhere else. They might have tried to apply for the EIDL loan and it was told it was closed. Well, all that's back open and all of it's fair game again.
Mm,
Same thing with PPP. PPP has relaxed some of their guidelines. So we want to make sure they understand that both programs have changed and
okay.
we need to take advantage.
And is for the EIDL, is that also a deadline of June 30th as well?
As it stands right now, yes.
Okay.
Yeah.
So when you think about, a person goes into the website, they're putting their information in,
Mhm,
what are some documents that they would need that
mhm.
typically is something that they have to potentially gather to make sure they upload as well, aside from things they can get right off the top of their head and maybe their
Yeah,
tax ID numbers?
sure. So on the EIDL loan, it's going to be personal financial statements.
Mm,
They're going to ask for some type of payroll information, so similar to PPP. Usually, they're going to use what are called 941s or 940s. And if they don't have that, they'll ask for some type of summary, which usually you can create with an Excel spreadsheet.
okay.
Um, and then they have an application. EIDL has its own application. Again, all things that they'll be able to download
Mm.
on the SBA website and then upload to SBA as part of their application process.
Oh, beautiful, beautiful. And when you say personal, is that like personal expenses, or is these business expenses?
Yeah,
Before it gets to.
great question. So on a personal financial statement, you're going to list your assets. So generally, what's in your bank account, the worth of your business, the worth of your retirement assets or stock assets. Also, anything you might have like cars, automobiles, houses. And then you're also going to list any liabilities you have either tied to those assets or just general liabilities. So student loans, maybe personal loans, different things like that.
Okay.
Then they're going to ask you to list some of your assets. Okay, so I have an account with E-Trade. I've got a house on Market Street. Whatever you have, you're going to fill that out on that form and then put that information in. What they're
Okay.
really trying to do is they're trying to make sure you're not like a billionaire applying. I mean,
Mm,
they're not scrutinizing it the way they usually do, but
mm.
they also want to make sure that people aren't trying to you know jerry rig the system, so to speak, or trying to take advantage of the government's money, because at the end of the day the taxpayers are responsible.
Okay. So you have a few assets, 100,000 worth or what have you,
Yeah, that's fine.
it's not going to trigger you to not get the money.
Not at all.
Right. Perfect. Perfect. Now this has been super helpful. I know there's, a lot of people, even me, being enlightened of who can actually, you hear PPP, payroll protection, people are like, I don't have a payroll,
Right, right,
and
right.
right away they're looking for, they're realizing they don't qualify for it. But this is, I think this is huge and taps into a whole new pool of people. Is there any minimum? So a person with their Schedule C, it's not much, how much money they made this year, is there
Yeah.
minimum in which they've made that may make it doesn't, for them not to qualify based on such a small amount?
I mean, we try to keep loan amounts above $10,000. That being said, I would generally say that ideally, hopefully, they've made at least $25,000 in a year. Doesn't mean that they can't get the loan, but that's about, I'd say, kind of the ideal at a minimum amount.
Okay,
Once we start putting in all the formulas and different things like that.
got it. Okay. Thank you so much, Everett. Appreciate the time, and we're looking forward to having you back as well. I know that we have partnered on the P4 Hub,
Yep.
which a lot of folks on the line don't know about just yet, but it's going to be an exciting project that, kind of post-COVID, making sure that we have, empower entrepreneurs and business owners to have access to capital and kind of resources in the Germantown area. Will be those fireworks out there.
Yeah, I'm hoping those are fireworks.
Yeah, we want to talk about that. It's Philadelphia these days. So, but looking forward to sharing with everyone what we're doing with that project and the Opportunity Zone here in Philadelphia in partnership with Lendistry and others as well. And also we'll have a video with African American Chamber of Commerce as well with Donovan West to talk about some other opportunities as well for small business owners. So thanks again, Everett. Look forward to having you back sometime soon and talk soon.
Yeah, for sure. Thank you, Sulema.
Absolutely.